Hi everyone, time to talk about job order costing. Well, really we're going to talk about two cost systems. Chapter 2 will be job order costing and Chapter 3 will be process costing. Now let's talk about what the difference between those are. This definition I got straight from your textbook, so you can grab it out of there. But a cost accounting system that tracks cost by specific jobs. Alright, what this means is that you are going to do one specific job, something like, I think your book uses guitars, and that's going to be the example we use throughout this as well. If you're going to make a guitar that, requires 20 hours worth of labor and, specific materials, that's going to be, you're going to track the cost for that specific guitar because it's a unique item. Versus, let's say you've got another guitar you're making for somebody else, and maybe it's going to take 100 hours of labor. Well, that's going to and it's got much higher end materials. Well, that's going to be a whole different set of costs. So you can have any number of jobs going on, but you're tracking costs by that specific job that you're working on. All right, so it's best used for unique items, like I said, a guitar, a house, right? One house is going to be different than another house, so it's going to have its own direct materials, its own direct labor, its own factory overhead. Okay. Process cost system is a little bit different, and like I said, we're going to be covering it in Chapter 3. Process cost, we are tracking costs by processes, not jobs. So imagine you're making like vats of ice cream or something, right? They're all the same, everything is exactly the same. This one is the mixing vat, and this one is the freezing vat, and then, the packaging vat. Well, not vat, but area maybe. The idea is you're tracking costs by the processes that it takes to make them. And that's more common when you're dealing with things that are all basically the same. As the example is vats of ice cream, soda, tennis balls, things like that. All right, so that's where we're going to be dealing with the process costing system. Now, we talked about this a little bit in the last chapter. Both of these are going to have the same types of inventory categories. And you're going to be hearing about these pretty much all the way through. All right. So the first category of inventory is going to be raw materials. All right. So if you remember, if you listened to my lecture in the previous chapter, we did talk about this a bit. Now your book just tends to say materials, but I know when I was a student, I learned as raw materials. And that was easier for me to remember that they were like untouched materials. So it has both direct materials and indirect materials that have not yet entered the manufacturing process. So this is like your storage area for everything that you buy. You buy everything, I think of it almost like a warehouse area where everything is untouched until it comes out to be worked on with a specific job. So that leaves us to the next one. The next one is your work in process inventory. Okay? Work in process are the items that you're currently working on. You're in business, you're making something, you're making products, and these are products that are being worked on the floor. On the floor, the factory floor is what I mean by that. All right, so you're taking the materials off the shelves and you're putting them into process. So you've got materials in there, you've got your direct labor in there, and you have factory overhead in there. And we'll talk about how all those things get in there in a moment. All right, but they're not complete. That's the thing, right? They're in process. So the next category, the third and final category of inventory, is going to be your finished goods inventory. These are products that have not yet been sold. All right, but they're complete, right? So they're out of process, and now they're sitting on the shelves, if you will, in some sort of finished goods inventory. Okay, once they're sold, they come out of finished goods inventory, and they actually become cost of goods sold. So imagine you're accumulating all these costs in there, right? You're taking materials, you're adding in labor, you're adding in factory overhead, so it's like a bundle of costs, if you will. And then all of those costs get transferred to finished goods. So then when you sell it out of finished goods, you then can consider that to be a sold item, and it's the expense of cost of goods sold. I mean, the idea is you're selling it for more than it cost you to make it, right? So sales is different. But this is your cost of goods sold piece, and how we calculate what the cost of goods sold is. All right. So for this next bit of an example that you have here, I'm going to be doing it in Excel just because it's hard for me to do on the board on this, but you can kind of track along in your notes as you do it. All right, so what you would have on this left side here in this job order cost flow is you're going to have these T accounts. And I spaced them more than you have room for, but you'll make it work, I'm sure. Okay, so as we're going through this, I'm going to go into what it would take to make a guitar. Okay, so I'm going to try to give you just a bit of an example. So the first thing that you do, well, the first thing that you do is you buy the materials to make the guitar. So let's say you buy some wood for, let's see, I'm trying to see my dollar amounts. Say, well, here we'll do it like this. Wood. Buy some wood for $5,000, let's say, and then you buy some string, right? Guitar string for $250, and then maybe we need, what else do we need to make a guitar, right? We need to smooth out the edges of the guitar. Maybe we have to buy some sandpaper, right? So we're buying our materials here. Sandpaper, let's say $100 worth of sandpaper, and, you know, polish, right? You've got to make this thing shiny. So it came out. It's not funny. Capitalized it to Polish. Polish. All right. Polish for $200. Okay. So I'm just giving you some. I'm just making up some amounts here. So what I've just done is I have now bought the materials, the raw materials that I'm going to be using in my process. So I'm going to make this blue. All right. Now the journal entry for that. So we're going to be doing this side by side here. We're doing it simultaneously. The journal entry for that purchase is going to, for buying raw materials, here we'll do this, buy raw materials. It will be a debit to raw materials. Oops. Ooh. Debit, raw materials. Your book just probably uses materials though, but like I said, I've just got a place in my heart for raw materials to be said that way. And if we added all these guys together, you're looking at $5,550. Oops. So debit raw materials for $5,550. And a credit to, like, let's say accounts payable or cash for $5,550. Okay, so that's your original purchase. That is your first step. You know what? I was thinking about making it blue to tie to it, but I don't know how realistic that is to do. Okay. Yeah, I think it'll be too confusing. Okay. Next step. Now we have to actually start putting some of these materials in production. So let's say that we pull some of these out, and the way we do it is the WIP has numbers, because each job would have its own number, right? So we're going to take it out of raw materials, and we need to put it into the WIP. So our journal entry, let's say we take out $400 worth of materials. Okay. It's funny, because when I'm in a classroom, I do it in multicolor, so I'm kind of following that along. All right. So we're going to take out $400 worth of materials. All right, and I'm going to keep coding materials as blue just so we can kind of track that as you go along. And the WIP, let's say there's nothing in there, is a brand new thing that we're working on. We're going to put that $400 in here. And again, we're going to make it blue so it matches. So, I'm going to draw an arrow. I think I'm getting a little too fancy now. All right. All right, I can't find the arrow quickly. It's not in draw. Well, I can draw an arrow. That I can do pretty easily. There we go. That's really step 2. So what I've done is I've taken direct materials. Let's go back to not drawing. Oh, no. Okay. No, I'm still in draw. Hang on, I gotta pause this while I figure this out. Okay, figured out. So this is direct materials. All right, this is direct materials going to work in process. Okay, so really kind of step 2 here. You're going to debit work in process. Let's call it job 101. And you'll credit raw materials. Can't spell it right. I should have a CR in front of this. Sorry, I'm being lazy here. So you have your debit and your credit. All right, and it was for $400. 400 out, 400 out. Wrong place. Okay, so let me make this a little bit bigger. All right, so that's really step 2, right? I want to like number these, but okay. Next step. So if you want to on your paper number these, this is really like step 2 here. All right, step 3. Let's say that we are now going to take it out of, we're going to take some indirect materials out of raw materials. Okay, so we're still dealing with materials, so we're still going to label this to be blue. You know what? I'm gonna make this a combination journal entry, and I'm doing it this way because this is the way your book shows it. So really, it's 405 is coming. Oh no, 400. 400 goes into your WIP. 405 comes out of raw materials, and let's say there's 5 of indirect materials. That's going to go to factory overhead. Okay, so think about what indirect materials could be. I would think the sandpaper would be an indirect material, right? It's a material for sure, but it's not worth quantifying. Oh, I used 1 sheet of sandpaper, right? I mean, it doesn't make sense. So the idea, like I said, I'm trying to capture the way your book does it, is you're going to take $400 out of here that goes into direct materials, and you're going to take $5, another 5, so there's your 405, your credit here, and you're going to put 5 of that into factory overhead. And like I said, that's called indirect material. All right, so it's really like step 2 still. Okay, so we took direct materials, put it into the WIP, indirect materials, and we put it into factory overhead. Okay, so let's move on to the next step. Next step, let's look at labor, right? We have materials, let's deal with some labor. Direct labor. All right, sorry that my orange arrow is going over the top of this. I'm wondering if I can make it smaller. There we go. Kind of. All right, so direct labor. People, whoever is making the guitar, right, with their hands physically on the guitar, that's going to be direct labor. So let's see what dollar amount did I say to use. $400. Nope, not $400. $500. Okay, so we're paying the artist who is making our guitar $500. Okay, that's a little bright. All right, so our journal entry for that, well, okay, so 2 pieces. Let's pay this person. I'm trying to do it the way Cengage has you do it in the answers. You've got direct labor for the person who's working on it, but let's say you also have some indirect labor, meaning you've got to pay like the person who's supervising the process, right? The plant supervisor or the maintenance person. You have to pay them their salary too. So you have direct labor, the people that with their hands on the job, on the guitar. Indirect labor, people that are part of the process, but their hands are not necessarily on the guitar. They're going to be indirect labor. And we'll go with $400 for that. So if that's the case, here's my debit, and I'm going to call this number 3, just so I can track what's going on here. And I'm going to have the same debits. Debit WIP job 101 for $500. Debit factory overhead for $400. And my credit then is going to be to something like wages payable for $900. Okay. Hey, you know what might even be more helpful? How about if I do this? Yeah, it's yellow. You know, I try to do this in like Microsoft Paint and stuff, but I'm just not that person. I'm all about my Excel. What blue did I pick? I guess that's not quite right, but we're going to pretend it is. Anyway. Oh, I picked it from over here. Okay. I'm enough of a stickler that I need to fix this first one. Okay. All right, so those are our first 3. We've dealt with direct materials, we've dealt with direct labor, we've dealt with indirect materials, indirect labor. So now let's move on to more factory overhead items. Remember, factory overhead is where everything that is not direct materials and direct labor goes. Okay, so, might run out of room. Nope, I don't want to do that. Make it a little bit smaller maybe. There we go, I can get one more in here. All right, so remember, things that go into factory overhead are going to be things like your electricity and your rent and property tax or property taxes or supply. Well, no, supplies is indirect material. But you get the idea, like regular utilities, depreciation, all of those things. Things that have to do with making the product but are not the product. If that makes sense. You know what? I can pull this out of the screen. There you go. Ooh, not that far. If I can move this whole thing up a little bit so I can get a little bit more space on the screen. There we go. I like that. All right, so we're going to debit our factory overhead, and we're going to credit a bunch of different expenses, things like utilities payable. And let's say rent payable. Ooh, skip my E. And let's say accumulated depreciation. Now think about that. Normally your depreciation journal entry would be debit depreciation expense, credit accumulated depreciation. Now instead of making it an expense, we're actually making it a product cost. So let's pretend we'll put some numbers with this. 1,000 here, 2,500 here, 300 here. So your debit to factory overhead is going to be the culmination of all these things. We're going to add them all together, and it's going to be 3,800. All right, so we'll make this, what color shall we do? We'll make these light green. All right, so the idea is this is really 4 if we're doing it that way. And we're dealing with the factory overhead accumulation of costs. And we've got a debit here of $3,800. And we need to make that green. All right, let's move it along. So now we have direct materials, direct labor, and factory overhead. But how does factory overhead get over here? That's really the question. Okay, how does factory overhead get into the WIP? Well, factory overhead is like a huge bucket of costs. Right, tons and tons of costs are in there. Direct material, direct labor, factory overhead. And we have to figure out a way to apportion it a little bit to each job. So there's going to be a couple of ways that we talk about how you apportion it to each job. For right now, let's just decide an amount. And a small amount is going to come out of this big bucket and go to WIP job 101. So we're just going to use an amount. We'll say $55. Like I said, we'll worry about the math on that a little bit later. Okay, we'll make that gray. So that $55 comes up here. All right, so, and, we'll try to draw an arrow again. See how great that goes. That's going to come right on up here. That wasn't too bad. All right. So now our journal entry for that is going to be, just like you see, debit to WIP job 101, and a credit to factory overhead. For $55. That's the amount we decided. Okay. So now the question is what happens when we finish the job? Well, when we finish the job, we transfer all of the costs over to finished goods because we're done. All right. So the accumulation of all these costs, you're looking at what? Add them together, $955. So the idea is I'm going to credit this, my WIP here, for $955, and I'm going to put it in finished goods. I'm going to draw another arrow. Let's see, draw. So this is going to go from here to here. Okay, and let's assign it a color, because that's what we're doing. Yeah, no. Yeah. Don't love it. I need some more colors. Trying to find, without going crazy here. All right, fine. I'll pick one of the other blues. And I'm even not in the right place. How about that? How about them apples? Okay. We'll go with this nice neutral. All right, so our journal entry is going to be a debit to finished goods. And credit to WIP job 101. $955, $955. Okay, so now it's sitting in finished goods and you're waiting to sell it. So let's sell this thing. And when we sell it, it's going to come out of finished goods, $955. Fine, we'll use that. Will come out of finished goods and it will go into my cost of goods manufactured. All right, cost of goods manufactured, cost of goods sold. The idea is basically the same. The point being is that something that you made versus something that you maybe purchased and resold. So we tend to use cost of goods manufactured when we made the product. That's going to come out of here and go right there. So you will have a debit to cost of goods manufactured and a credit to finished goods. That $955. There you have it, folks. Now, you may think, all right, well, great. I don't have to remember this. I can just look back to the chart. Okay, well, what's going to happen with all of this is we are going to use this process flow. It's important that you understand, because what's going to happen is come the next chapter it's going to get a lot more complicated because we're going to add multiple WIPs. So it's really important you have a decent understanding at this point of how the costs flow, so that when it comes time to add multiple WIPs, you're like, oh yeah, okay, I see that. Now just one thing, everything up here, this up to this point, is all really, everything up to this point is on the balance sheet. Cost of goods manufactured, that lives on the income statement. Okay, so just so you realize how it kind of crosses over there. All right, and maybe we sell this thing for $2,000. So we'd have sales of $2,000 less cost of goods manufactured of $955, and then you have a gross profit of what is that? $1,045. Okay, I'm going to stop this now and move on to the next one.